Well, good afternoon again. We're here on the Educated Retirement with Jay Kaplan and Laurie. And Laurie is a Arteaga. I might as well say her whole name, you know.
Yeah.
Yeah, you might as well. You know, she is, as you just heard, Ron is mylender.com. I'll put in a plug for him. I picked up the what I use all the time for people who are on the show more than once, repeat offenders. She is definitely one of the highest rated and most often repeat offenders of all time. Uh,
Right.
she specializes in everything horrible, like taxes and horror movies. And we have COVID now, but we won't talk about that unless you want to talk about it. So, but before we do that, let's go ahead and introduce yourself.
So thank you for having me again, Jay. I
Of
appreciate
course.
it. Yes, it's always good to see you. So my company is Elias Income Tax. It's a family-owned business established over 30 years ago, and we're enrolled agents. So what an enrolled agent does is they're authorized on a federal level by the IRS to represent taxpayers on issues related to collections, audits, back taxes, appeals, and tax preparation for individuals, businesses, and corporations.
Uh-huh.
Since we're licensed on a federal level, we are able to help on a national level. So we do taxes pretty much in every state. So I'm able to help people, from New York to California to everywhere else in between. Now, with a lot of businesses being closed, it's actually been pretty beneficial doing everything online. I
Of
do have a
course.
secured, yeah. So it actually, ironically, with the pandemic, it actually boosted my business
No
because people
kidding.
weren't, they weren't able to go to a brick and mortar like they have been before, going person. So it really disrupted, I would say, most tax businesses, as every other business, of course.
A lot of businesses are doing very well because of it.
Oh yeah.
I mean, we don't like to brag that reverse mortgages are doing better now than before because
Hmm.
it's fear, but it
Right.
is in a way. And,
Right.
people are asking themselves questions now they didn't earlier or when times
Right.
are better.
Hmm.
Or I don't know about, well, we're not horrible. Things are better, but they're unsure. We don't know what's
Yeah.
coming in the
Oh,
future.
absolutely.
And
Absolutely.
so people want to fix that, and I'm sure they want to fix that with their taxes too.
Oh yeah.
And I'm sure they want to get their money back with their returns back as fast as humanly possible.
Right. Right.
So we got a hold of you just before your
Mhm.
big season, correct?
Right, right, exactly. So I want to take at least a good 30-day vacation before, but it's not really a vacation. Obviously, I have to prepare for the next year. So it's aside from continuing education, it's just a lot of clients are calling me now for consultations to prepare themselves for next year,
Right.
especially businesses. A lot of people got unemployment this year, and I'm hoping that people did withdraw or withhold taxes on that
Right,
unemployment
because
income.
because you have to pay taxes on that. It's still
Right,
income.
right. Exactly. So most people just thought that it was unemployment. They filed, and it's surprising always how many people decide not to withhold taxes on it. But yeah, you are supposed to pay taxes on it and combine it with the rest
I
of your
know,
income.
but you got to admit, people that are not working, they're getting a lot less because usually, I mean, you see a lot of these complaints. People make more money on unemployment. No, they don't. I
Hmm.
mean, that's going to be very rare.
Right, right.
So, they need every penny they can get, and they're going to worry about paying their taxes later. So I can see why
Hmm.
most people are not doing that. But
Right,
as the tax season comes into view, which it is,
right,
they need somebody like you to figure out the best way to handle that because now they're going to
right,
need all the legal write offs they can find. Did I
right.
say legal? Yeah, I did. Okay.
Yeah, that's the right term, Jay. Yeah.
I tripped on it a little, but I'm okay.
Yeah, no, it's true. So, I still am taking calls at least for the remainder of the year, mostly business consultations or just people kind of wanting to know where they're going to be, to maybe make a final estimated tax payment or what to prepare for. So, it's a very smart thing to do. I always recommend it. They can reach me on my website. It's
Yeah.
www. I can't forget that, but
No, you shouldn't.
www.eliasincometax.com. They can go to my contact us page and email me there directly. Now, if they want to get a hold of me, it's best to reach me on my cell phone. It's 714-457-6350. Again, 714-457-6350. And they can ask me questions and, their concerns. And so, anything that's making them nervous for the next year, it's just better to get the question answered.
Well, there's a lot of nervousness going around.
Oh, a lot.
It's also Thanksgiving, but you know what? I said earlier in the show, we may feel more like the turkey than the celebrators. But
Right?
there's still a lot to give thanks for, and we should never forget.
Absolutely. I think it made a lot of people just really scared, nervous.
Yeah.
A lot of people lost their jobs, lost their businesses. But on the other side, I think it brought a lot of families together, closer, and just more grateful.
It
that's
sure
what we have to
taught a
learn.
lot of people how to use Zoom.
Oh yeah, that's true. Zoom, TikTok, a lot of things online now.
Yeah, I still like Google Meet. It used to be Google Hangouts. I think that's easier, but it doesn't matter.
Yeah, I never have used that. I didn't use too much of Zoom either. I mostly work from home. A lot of clients wanted to meet on Zoom, and because I was working from home, then my business attire was a pair of yoga pants and a t-shirt. So but yeah, it was a very busy tax season.
Well, I have a shirt on. I'm not going to talk about anything else, but you aim your camera where you want it to, right?
Right, exactly. So now moving forward with the new year, a few things that are a little bit different and changes. I'm only going to talk mostly on the individual level. If for businesses, we'll probably maybe do another show, maybe before the end of the year or something. Sure. Because I'm sure a lot of businesses want to know about the PPP loan, SBA loans, how that's going to affect their taxes. But for that, we'll talk about it maybe on another show.
That would be fine, and look forward to it. Probably going to have to wait till after April, though, huh? For you?
No. I'm still available. I would say December and January.
Yeah.
It starts getting really busy for me after the first week of January. Then I go back to my regular 80-hour a week schedule.
Yeah. But on businesses, it depends on the end of your fiscal year, correct? Not necessarily. Yes. Okay. Anyway, I'll stop interrupting. Go ahead.
Yeah, no. So one of the things that's a little bit different, just slightly higher, are the standard deductions. So this helps taxpayers reduce their taxable income. So for single, it's $12,400. For married, it's $24,800. For married filing single or separate, $12,400, and head of household is $18,650. There's an additional standard deduction of $1,300 if they're over the age of 65 for married, and $1,650 for unmarried. So standard deductions, like we've discussed before, it's, you either itemize deductions because you own a home, and you do, charitable donations, your car registration goes in there, your mortgage insurance premium does, property taxes. So it's limited to just a few items, but that's where they would go. And then, and obviously if you don't meet the threshold of those limits that I just mentioned, then you just do the standard deduction to help reduce the taxable income.
Right. So you do get, that's like a minimum. Those standards are a minimum amount. You get that no matter what.
Right, which the limits are pretty high, I would say, for single people. Even for married, they're overall pretty high. The only way you really exceed it is if you own a home. That's really the only way.
Yeah.
Or if you have a lot of gambling losses, believe it or not.
Yeah, well, why?
A lot of people, well, now casinos have been closed, but maybe in the beginning of the year, some people always get gambling winnings, and you could claim the gambling losses.
Well, medical
so they go
too.
there.
Wouldn't medical apply also if you were in bad shape and you didn't have the right kind of insurance, etc.?
Absolutely. So the medical threshold is 7.5% of your adjusted gross income. So you have to meet that threshold plus the standard deduction threshold. So, I always tell people, if you had a major surgery, your kids got braces, or there's, you broke something, you broke a bone, you were in the hospital, whatever it may be. And a lot of people were in the hospital this year. That make sure you pile up, your, you were one of the offenders this year.
Yeah.
But I mean, I'm glad to see you look, you look healthy overall, Jay, I have to say. And I'm glad
Well,
we've talked.
for an old guy, you mean, for an old guy.
No, not at all.
For
not
somebody
at
taking just the almost 75 deduction.
all. No.
But I go back for fairly major operation here next month. But I don't think I'll miss a show. It'll be between shows. And I am very lucky. The 65 plus people are very lucky to have Medicare.
Yeah. Oh, absolutely. Absolutely. No, so, you might be one of those people that actually qualify. I mean, I don't do your taxes per se, but, if you tally up all your medical expenses, which a lot of people were in the hospital this year due to COVID, it's just important to try to see if you qualify to claim it. So always check with your tax preparer. And even
That's
if you,
right?
That would be me. Absolutely. Absolutely. Again, it's EliasIncomeTax.com, and go to my contact us page and email me your question there. The other thing that people ran into some financial trouble. So they were pulling out money out of their 401k or their retirement distributions, their IRAs, whatever it may be. So what the IRS did this year is that they waived the 10% penalty.
Wow.
So yeah, so it's not the end of the year yet. So if you're
I didn't know that. That's great. That's good to know.
That's a really good one, because now, especially the holidays are coming up, and a lot of even businesses are even slower, or companies are maybe closed for the holidays. It's a good idea. If you're really running into financial problems, you can pull out of your 401k. It's really usually not recommended unless it's really necessary. It's not one of those things, it's free money. You still have to pay taxes, though.
Correct.
On the whatever your distribution is. So if you made $50,000 and you take out $10,000, you would be taxed as if you earned $60,000.
Yeah.
The only thing that gets waived out of that $10,000 is a $1,000 penalty. So I always tell people, make sure you withhold, though. From that distribution. It's not, some people still want to do, zero, withholding, and I recommend against it. I think you still have to withhold, your 10 to 15% if you don't want to do 20%, and make sure you withhold with the state, because
now
some people are not
this
doing
is
that.
probably a subject for a different show, but if you take money out of your 401 or your retirement funds, you pay taxes unless it's a Roth, correct?
No, even if it is a Roth and it's
you pay taxes on. Yeah, you pay taxes on.
Right.
Yeah. But
Right.
once you take it out, let's say things aren't as bad as you expected, then you want to put it back in.
Right. Yeah.
If you put it back in, do you have to pay taxes again when you take it out? Or
No.
what?
So you know what? That's a really neat thing. I'm glad you brought that up. So the IRS is allowing you up to 3 years to pay it back. So if you took out, and it would be considered a rollover, which is really great. So let's just say you did pay taxes on it for a couple years, you decide to pay it back. It would probably just require an amended return, but you could get that money back for the overage. Another neat thing during this 3-year period, so again, to that example of $10,000, you don't claim it. I gave the example of 50 and 60,000, but another neat thing is that you get to spread it over 3 years. So it's $3,333 over the next year. So it kind of lessens the impact or the penalty.
There's a lot of good information here I didn't know. A lot of other people probably don't know.
Yeah, a lot of people don't know about this, because I've had a lot of people tell me, they're really either because their business went under or something happened in the family, whatever it may be, and they're taking large amounts, let's say 30,000 plus. So, this lessens the blow, and they're able to claim $10,000 per year instead, which makes it a little bit easier and better than, claiming a full $30,000 in 1 year. A lot of people don't know that. So, it's not the end of the year yet. So right now, if you need to make any changes like that, take that opportunity, because we don't know what might change next year. Everything's still really in the air. They might extend this, and this might be allowed next year, but we don't know that.
Yeah, we have no idea what's going to happen next year.
Oh,
which is usually exciting and surprises, but right now, based on recent history,
Right, right. No, absolutely. I think people are going to set their goals very differently next year. I think it's really, this whole COVID's really changed the lives of a lot of people and how, we perceive money, savings, even preparing, for the future, for sure. One other thing, too, that's another neat change is that charitable donations. Let's say you're a person that doesn't itemize. They're going to allow up to $300 of above the line deduction or so in other words, if you earn $30,000 and you gave a fair market value or a check to a church or whatever it is, it's donations of
Right.
$300, it reduces your income by that $300. So that's what an above the line deduction is. So that's, another thing, anything that helps. I always tell people, because people are like, oh, it's only this amount, it's only this, it doesn't matter. When you add all those little things up, it actually ends up being pretty large, of an amount or savings, or just larger refund.
And it could put you in a different tax bracket, just a dollar or something, right?
Yeah, exactly. So I always tell people, don't be shy to ask. There's really no such thing as a stupid question, because it's like you're not going through TurboTax, you're not going through an automated system that you just answer yes or no. You're talking to a live person. So that's why I tell people that's the big difference between going to a person like me or through a TurboTax or H&R Block and automated. Now, if you're a college student with just one, not even if you're a college student, but if you just have one W-2, you could actually just file for free at the IRS website. A lot of people don't, they take that for granted, but you can file for free on an IRS website, or you can take a cheaper or less expensive option with H&R Block, or TurboTax or whatever. But I always tell people, make sure it's really worth the money to spend, with an expert. When you sit down with me, I'll tell you what you qualify
And
for.
you're not that expensive, are you?
I'm sorry?
You're
No,
not
I'm
that
not. I'm not.
expensive.
That's another thing. I always tell my prices beforehand. It's not like you're going to be surprised with a large bill. I've had people come to me. Actually, I got a lot of clients this year from CPAs, my clients were afraid to ask their CPA a question, because they really were. They're like, I'm afraid he's going to talk to me like I don't know anything, or it's going to cost me, I don't know how much.
It's okay not to know anything. This
Right,
isn't
right.
your thing. I may
Exactly.
know a lot about what I do, but I don't know, whatever word you want to put in there about what you do.
Right, exactly. So, I tell people you should never be scared to ask your CPA or enrolled agent or taxpayer a question. They're not, if they get mad at you, that's a problem. They shouldn't. Now, a lot of them are billable, including myself. But you could always ask what the fee is, or what the tax preparation fee or the range is for their particular situation. So that way you're not shocked. I always tell people, make sure what the fee is up front, and don't be surprised, because another thing is, like with these rapid refunds, some people just say, yes, I want my money right away and I don't want to pay you. Yeah, just like, so they just sign the paperwork and they don't realize how high and how expensive the fee is. It's shocking to me how many people didn't know that they paid a $500 or $1,000 on a tax return that should have only been a few $100s, because it was simpler. But I always indicate where the refund line is or where the tax liability line is. I think taxpayers should be at least minimally educated, on how much your refund is supposed to be, and what you do qualify for your particular situation, or how to make it better if you want to not pay as many taxes next year.
Right.
So, but again, that's why you check with a person like me. Now, another thing is with stimulus checks. Some people had, almost everybody that qualified, if you made under 75,000 as a single person, 150,000 as a married person, or 112,500 as a head of household, you got the $1,200 or the $2,400, or $500 per child. So there's people that had children born in the year 2020 that didn't get the check. So it's based on 2020. So the neat thing is that you kind of get to do like a reconciling, and you get to claim that $500 for that child. So that's another thing. That's why I always encourage people, go to a tax preparer that knows what they're doing, because you don't want to miss out. $500 or $1,000, it could make a difference.
Right, and they can, even if they have had a CPA for 20, 25 years or whatever, that person's getting old. No, that they can still ask you questions. I mean, I call you with questions, right?
Uh-huh. Yeah.
All the time. Nah,
Uh-huh.
maybe not all the time, but as much as
Right.
possible.
Right.
So other people can ask you questions too, even if they have somebody else or whatever.
Mm-hmm.
I mean, if they need you to do a job or do something, I'm sure
Right.
that that would be, as you say, billable, but
Right.
just regular questions. You're not exactly like an attorney that hits the time clock when the phone rings, right?
Right, right. But yeah, you're correct. And I do have clients that, because they have their loyalty to their CPA or their enrolled agent, they don't want to switch, and that's perfectly okay. But they actually pay me to review the work, or they're doubtful, or their CPA or enrolled agent is too busy, and they just want a second set of eyes or a second opinion. I do get, I billable work for that type of stuff, and it just gives that taxpayer some peace of mind, where
Yeah.
it's like, yeah, everything's fine. So yeah, I do that as well.
Reinforces the
Exactly.
fact that they have done the best to protect their own tax picture.
Exactly. It's definitely worth it. Another thing, because of people working from home this year, more people are going to qualify to itemize, I think, with the state of California, or even just, itemize in general, depending on their state. If their state has income taxes, a lot of people had their home office, they had to buy a new computer, laptop, maybe more internet, a higher internet bill, whatever it may be, or more supplies. And maybe if your company didn't provide it, then you could claim it on your taxes. Obviously, there's thresholds for state, just like there is for the IRS, on the
Yeah.
standard deduction. So different states have different thresholds. So just make sure you check with me. But I'm telling people, just tally up, and if you meet the threshold, great. Then you're able to write off those items with the state, whatever state you're from. For new businesses or just LLCs, this is another point, or S corps, their deadline is March 15th. I'm surprised how many people don't know this, because everybody
I
thinks April
didn't.
15th.
I've never owned an S corp. Even when I was one, even as a one person, I still have always done a C corp
Okay.
because I was used to that, and I didn't think there was any big difference in what I was paying. But
Okay. Yeah. So for C corps, it is April 15th. So you're fine. You've probably been doing it on time anyways. But for S corps, LLCs, and actually just S corps and LLCs, it is March 15th. So make sure you file on time. I always tell even my businesses, my clients, to make sure you get your stuff in by January or February. You don't want to wait till the 14th or the 13th. You know what I mean, to get it. Most likely, your taxpayer will file an extension because
right.
we're so busy as is. So the good thing is that you don't get penalized for filing an extension. It's for 6 months. So
Yeah.
I'm telling all my businesses now, start kind of tallying up all your information, your profit and loss, whatever, because it ends December 31st.
Right. And your personal taxes can also go 6 months. Can also.
Correct.
Right.
Yeah. So, and that one would be before April 15th. I tell people, don't wait to the last minute. Don't wait till April 14th, 15th to file the extension. If you feel you're going to be one of those late filers, which this year, everybody waited till July 15th,
Mm-hmm.
It was a pretty intense year for me. But yeah, make sure you do it, February, March. Don't wait till April to file your 6-month extension, and then you have till October 15th. Keep in mind, this is just an extension to file. But if you think you're going to owe, make sure you pay those taxes by April 15th or by March 15th. People just think, but I filed the extension, I shouldn't owe.
Yeah, I mean, they're
No,
not
you'll
going to
still
put you
owe.
in prison, but there will be penalties. There will be interest.
Right.
And if that works out for you, it's a choice.
Uh-huh. Exactly. Now, lastly, since we still have a few more minutes,
Yeah.
the HSA, since it's open enrollment, make sure you do the HSA contributions. It's $35.50 for individuals and $7,100 for families. If you have more questions about that and how that works, they can call me. But I think HSA contributions are awesome. You can use it for health, related expenses that you might have. And it's also, like they say, above the line deduction. So it does help on, your overall over your taxable income.
Betty, you know, this half hour with you on it went so fast. Next time, maybe we should do an hour. We didn't
Yeah.
have any time to talk about horror movies. Or
You
is
know
there
what?
enough horror already going on?
Right, exactly. You know, the only show I was trying to think, I haven't seen, but the one show I did see with my best friend actually, because I'm a scaredy cat. I can't watch a scary. I love scary movies, but I just
Yeah.
can't watch them by myself. So I saw Evil on Netflix. That was pretty good.
Oh, okay. I haven't seen that. We're watching now what is it? The Haunting of Bly House, which was done by, Flanagan, the same guy that did the Haunting of Hill House
Uh-huh.
on that. But that's just another story. I mean, it's another story of the James, turn of the screw.
Mhm.
And I looked it up, and there's been like 25 different, movie and television versions.
Uh-huh.
And we had just seen The Turning. It's called The Turning, which is another version of Turning of the Screw, but that was regular movie stuff lately.
Uh-huh.
So, but I think what's on television that well, we only have a minute, so you know what we need to do is we need to put all this horror behind us and give us again all of your contact information, please.
Yes. So again, my phone number is 714-457-6350. Again, 714-457-6350. My website is www.eliasincometax.com, ELIAS, incometax.com. Go to the contact us page and you could find me there. You can send me an email directly on there.
Okay. And whether they need to hire you, ask you a question, or just
Mhm.
interview you and you interview them or talk
Mhm.
about whatever,
Yeah,
you're available.
correct. Yeah, I'm available through the rest of the year.
All right. And
Mhm.
this is Thanksgiving, so one more time, let me wish everyone, Sean, even you,
Thank you. Thank you,
and
Jay.
all.
Thank you,
I
Sean.
mean, to have a wonderful, wonderful, and very safe Thanksgiving because this is serious stuff.